In this chapter, we're going to go into more detail about finding and testing a trading system that works for you. Now, what we teach at ASFX, we have 3 systems, the A1, the D1, and the D2. But before we dive into the details of those 3 systems, we're going to take a 360-foot view. I guess if that's high enough. I don't know. Nah. In this chapter, we're going to go into finding what it means to find. We're really going to just talk about a trading system. In this chapter, we're going to talk about what goes into a trading system. You've heard me reference this throughout today's toolkit presentation. If you've seen the Forex crash course, you've heard me reference trading systems throughout that presentation as well. It's something that I talk a lot about because I think it's what causes most people to not make money trading. Simply put, they are not trading with a system. Rather, they have a feeling or they're able to do some analysis about one idea, not something that's repeatable, not something that's consistently proven in backtesting and proven through the past. It's something that they just kind of feel their way through. But what a trading system does, simply put, is it gives you the discipline and the rules that you need to follow every day in order to build a consistently profitable trading business. Because let's face it, we are not the same humans every day. We wake up, some days are good days, some days are bad days, some days we're emotionally in tune more than we are on other days. So what the system does is it allows you to peel through all of that emotional BS, all that emotional crap, and get down to what's actually happening on the chart and have rules for responding to what's happening on the chart based on statistical backtesting, not based on emotion. A trading system, one characteristic of it, has to be built on backtesting, on previous price action data and the patterns that has presented. Because if we don't have that, what we then would be basing our trading decisions on is a forecast, a potential idea, a thought, a theory, and there's no consistency in that. But if we could go back in time and prove patterns to be profitable more times than not, then you would think going forward, if we trade those patterns, we should end up profitable more times than not as well. So proper backtesting is a big part of the trading system, of proving it to be profitable, but it's not the entire thing. This is another tweet from myself. Love to pat myself on the back here, but it's really what's helped me a lot. I love this. Motivation starts it, discipline finishes it. I think to be a winning trader, you have to be passionate about trading. We're going to talk about that more in the next chapter. But the second part of this, the discipline, is something that I think you need to have before you can even say, I want to be a trader. Because without discipline, we are gambling. Without discipline, there's nothing that's going to keep us from going off tilt and placing outrageous trades, over position sizing, over trading, over leveraging. All of that happens when we let our discipline lapse. So let's talk about what goes into a system. Here, the system details, first and foremost, your entry trigger. What is going to make you take the position long or short? What is the symbol that, no, I shouldn't say symbol, the signal that flags you in, waves you in from the air, says, hey, it's time to go. There's a lot of things that come into play before we get to the trigger signal, but we cannot say we have a system unless we have, number one, the entry trigger. Number two, you need to have clearly defined rules for how to read risk and where your stop loss should go. Again, I've said before, with the A1 entry, the stop loss goes at the open price of the entry candle. That's, again, a little nugget from the A1 course that you're going to get into next. But I want you guys to understand that stop loss has been tested, proven throughout history for that pattern to be the safest place to put the stop loss, the safest place to read our risk. So knowing that, again, since I can even detail it to you here in words, that's another piece of the system. Every system should have not just the trigger, but how to read risk and where to put your stop loss. With that, of course, with risk, number three, we want to make sure we can read potential reward. Number four, we want to make sure we understand how much size each trigger signal can get. So for us, we have the A1 entry, the D1 entry, and the D2 entry. These are signals. With those signals, we can grade those trades A, B, or C. A being the best, C being the least probable. A is the most probable, C is the least probable. So for A grades of the A1 entry, how much size should that get? Let's just say for this example, 1% of your account. Okay, when I see an A1 entry, a really high probability A1 entry, I know how much size that could get. That's written in the plan. For example, just on the other side of that, let's say we see a C setup for the A1 entry or even the D1 entry, it doesn't matter. That setup, because it's going to be written in our trading plan, we'll know that should maybe get just 0.25%. If the best trade gets 1%, the least probable trade should get a lot less than that because it's a lower probability setup. So that's number 4, how much size the trigger signals should get. Number 5, we want to know how to manage the trade as it works in our favor. And number 6, we want to know how to manage the trade as it's not working out as we thought it would. So you want to have exit signals for as the trade moves in your favor and exit signals if it's not moving in your favor. So together, these 6 components make up majority of what goes into a trading plan. This is very simply put. It requires a lot of text. You're going to see my trading plan example here in a few minutes, but just understand, again, write this down. Your entry trigger, how to read risk reward, how to size each trade properly, and how to manage the trades whether they're working for you or working against you. Those are the 6 things that you need to have in your plan. And again, we want to focus on risk-free trading. What does that mean? Well, when we're using the indicators, we want to be able to make sure that we're timing our entries properly. The indicators give us what I call the bias. The bias is not the trigger signal. Bias does not equal trigger. What that means is we're going to use the indicators to identify trend, to read risk reward. We'll know where our stop loss can go. We'll know the key levels to trade to read potential reward. But that is not enough to actually place the trade. We need to also have that A1, D1, or D2 entry trigger to then say, boom, now is when we get in the trade. A lot of people, as they work through this, they start to say, oh, I get this. I know what he means by system. I know what he means, blah, blah, blah. And they start only trading based on bias. They think that they're all hot and unstoppable because they can read trend and they can identify this is moving up today, it probably will move up today, and then they just get in the trade at any moment, normally right when they get to the desk in the morning, because they're rushing in. They have to be right. They're not focused on making money. If you want to be right, that's fine. Read the bias. But if you want to make money, wait for the trigger signal. So let's talk about finding your trading edge within the system. This is a really important part. I think this is probably the most detailed part of this entire presentation so far. The system is all of those 6 components: the trigger signal, how to read risk reward, how to read trend, how to manage the trades. The trading edge comes from specifically what you do best within that system. So for ASFX, like I said, we have the A1, the D1, and the D2. For myself, I trade the A1 and the D1 better than I trade the D2. We have guys, I'll just call him Alex. If you watch our live chats, if you're in our Discord chat, you know who Alex is. I mention him all the time because he is who I would call the D2 king. At one point in time, he was crushing D2 entries. That was his edge. He was able to identify these tough to find reversal trades, which is the D2, while I'm trading in trend with the D1 and the A1. So my edge comes from those in-trend breakouts and in-trend pullbacks. Alex's edge comes from the D2. They're in the same system, the same umbrella. We're standing under the same umbrella, but it's basically like he's looking left and I'm looking right. That's his edge, this is my edge, but we're trading the same foundational knowledge of how to read a chart, how to find bias, how to read risk reward. All of that we understand the same, but he's leaning into what he does best. I lean into what my beliefs and what I do best, where my beliefs align, and that's where we find the edge. It's something you can repeat daily and something that you've proven over time through backtesting. So in the A1 and D1 and D2 course, I show you all the backtesting that goes into those entry signals so you can identify it for yourself going forward, and then you can go do your own backtesting and prove it to yourself. But of course, my job is to teach, so I show you all the backtesting in those 2 courses. So now you understand what goes into the system, you understand how to find your edge within the system. So now we're going to get into more detail specifically about one of those rules in the system, which is grading the trades. I've mentioned the A, B, C setup thing. We're going to break that down in more detail in the next chapter.